Hey all, today I'm going to tell you about the top 5 stocks to invest in during the 2020 crisis. I'll be telling you why these stocks are a good investment and also how much you can expect to make from them over the coming months. But before I do that, please drop a like down below. Now let's get into the video. So the first stock is home builders or home developers, such as Taylor Wimpey, Persimmon Homes and Barratt Developments. Obviously these companies are hit really hard at the moment because they're not making any sales as the property market's like frozen, and they're also not building any developments because obviously a lot of the employees aren't going to work. But they're still incurring costs in the background, such as the costs on finance and also maintenance cost of property maintenance. And they're also suffering a lot of pressure from the government to obviously build more homes each year. But obviously when the crisis is over, I expect these companies to bounce back really quickly, as obviously a lot of people have been stuck inside their homes and are going to want to move homes ASAP. Also, as the world transfers to more of a working from home situation, a lot of people are going to be wanting a bigger home for a bigger home office that they can kit out to a really nice work from home space. So why do I recommend companies such as Barratt Homes and Persimmons? Obviously these companies have been around for a long time. Barratt Homes have been around since 1958 and Persimmons since 1972. So obviously they've got a really great track record at going through long periods of downturns and recessions and managing their money through difficult situations and times like these. At the time of making this video, Barratt Homes has fallen from £826 per share down to £412, which means that there's been a 50% reduction, and if you invest in the stock now, you could definitely double your money if the stock does return up to where it was pre-crisis. Similarly, Persimmons has also dropped from £3,200 to £1,600 per share. So obviously that's a 50% reduction, and you've got the opportunity to double your money if the stock does go back to pre-crisis levels. My second stock is going to be airline companies, such as American Airlines and Boeing, because obviously these companies aren't running any flights or building new planes, but they're obviously still suffering some costs, such as aeroplane space rental and maintenance of aeroplane costs, and also other costs such as heating and rentals and repairs and other costs like that just don't ever go away. But obviously when the crisis is over, everyone's going to want to do a holiday as soon as they possibly can and are already booking holidays in advance. And obviously once people are working from home more often, they're probably going to want more regular holidays just to get out of the house. But you could argue that there's some downsides to airline companies as well. Obviously as more people are holding Skype conferences and Skype meetings or kind of video chat style meetings, there's going to be less need to fly abroad for business meetings. But there are going to be some countries and cities, such as New York and London, that obviously are always going to kind of excel in terms of business meetings. But I would expect to see that airlines in general are probably going to see less business travel in the future. So why do I recommend companies like American Airlines and Boeing? Obviously these companies have also been around for a long time. American Airlines started in 1936 and Boeing started in 1916. So they've also seen their fair share of recessions. But also these companies are multi-billion pound companies, and therefore obviously they're so big that they're very unlikely to fail and very likely to receive government funding to protect them if they do obviously start struggling cash flow wise. But obviously these companies have a great business model, that's how they got so big in the first place. So it's likely that they're going to carry on generating big revenues and big profits in the future. So American Airlines have fallen from around £28 per stock to about £10 per stock, and Boeing have fallen from around £345 per stock to about £120 per stock. So obviously there's a great opportunity here to between 2.5 and 3 times your money if obviously these stocks return to pre-crisis levels. My third stock is tour operators like Carnival, because obviously these companies are going to be hit really hard as well at the moment because they're not offering any kind of cruise line entertainment, but are still incurring costs such as maintenance costs and space rental and other kind of rent and electricity costs as well. So obviously a lot of the costs are still there, but the revenues aren't following up to repay. So obviously a lot of losses are being incurred at the moment. But obviously similar to airline operators, Carnival is going to bounce back really quickly because everyone's going to be wanting to go on holiday or go on a cruise as soon as the crisis is over. As such, this is a great company to invest in because obviously the profits are going to return back to normal in quite a short space of time. Carnival have been around since 1972 and are the biggest cruise line in terms of passengers carried. So you could potentially argue that this company is like too big to fail, and also you could believe that the government would support it and subsidise it if it generated losses that were too big for it to cover. obviously because they have been around for so long and they have made it through a number of different recessions and downturns, you could obviously believe that this company is quite cash responsible and is likely not to run out of cash in the short term. Carnival have fallen from around $43 per share to around $8 per share, which is a really great potential. Obviously, if the stock returns back up to pre-crisis levels, that's around a 5 times or 500% return on your money, which is a huge ROI. If you've enjoyed the video so far, be sure to leave a comment down below letting me know what kind of videos you'd like to see in the future. Alternatively, if you've got any questions, be sure to leave them down below as well, and I'll try my best to answer them. My fourth stock is credit card companies, such as American Express and Capital One. Now, from first sight, these companies don't really appear to be hit at all, because obviously everyone's still shopping and still using credit cards. And if anything, people are probably doing more shopping and more online shopping, especially using their credit cards in times like these, because obviously everyone's stuck inside and is a bit grumpy that they can't go out and do stuff. And also, everyone's going to continue using credit cards after the crisis because there's nothing really that's come into practice to replace credit cards yet. Which is why I don't really see why these companies have suffered such huge drops in stock value. The American Express stock has fallen from around $132 per share to around $75 per share, which is a great potential to earn about 1.5 times your money back if obviously the stock does return to pre-crisis levels. American Express has also been around since 1850, which means it's lived through every major recession ever and is almost certainly classed as too big to fail. The government is most likely to obviously prop up the company if it did suffer huge losses, but obviously considering they've made it through almost every major recession, they're probably very cash responsible and have already got a certain plan as to how they can survive through a potential recession or downturn with very little loss or profit impact. Capital One, on the other hand, have only been around since 1994, which means they definitely haven't been through as many recessions or downturns as American Express. But obviously it's very impressive that Capital One have become one of the largest credit card companies in such a short space of time. Therefore, obviously, it's quite comforting to know that obviously if you did invest with them, it's likely that they'll be very cash responsible and be able to return back to pre-crisis levels quite quickly. The Capital One stocks reduced from around $103 per share to around $44 or $45 per share. Obviously, this company is a bit more risky because they do focus on lending to people with low credit or no credit, such as beginners getting their first credit card. Obviously, there is more potential to make profit here, and you could generate up to 2 times or 200% returns on your money. My fifth stock is fast food companies, such as Yum Brands, which obviously own Taco Bell and KFC, and a bunch of other huge companies, and McDonald's as well. These companies are currently obviously hit really hard as well because they can't sell any food, but they're still incurring rental costs and a lot of wasted food, which is obviously very costly at the moment. But obviously after the crisis, they're most likely to bounce back very quickly as everyone's going to be craving fast food and won't want to eat grocery shopping or home cooked meals ever again for a long period of time. Also, if the general consensus changes to more people working from home, it'll be so much easier for people to just order a delivery to their house for lunch or dinner, and are therefore likely that these companies are going to be making a lot more sales after the crisis than they were even before the crisis. So Yum Brands was spun off from PepsiCo and McDonald's has been around since 1940. So both of these companies or conglomerates have been around for a long time and have been through periods of recession and downturn and have obviously responsibly managed their cash to be able to see through the downturn or recession and come out the other side generating more profit than before. You could also argue that these two companies are almost too big to fail as well, because millions and if not billions of people would be impacted and would be upset if McDonald's ran out of cash and ceased to trade. So the Yum Brands stock has fallen from around $104 to $63, and the McDonald's stock has fallen from around $217 to around about $160. So obviously there's a great potential here to make good returns on your money and up to 1.5 times return on your investment. Be sure to let me know in the comments below what you think of my 5 stock picks and also what you would give as your top 5 stock picks. You can either give specific companies or kind of just general industries that you think will improve after the crisis, and also why you think that they might improve as well. If you want to learn more about investing and finance, then feel free to watch some of my other videos. Alternatively, subscribe to the channel and ding the notification bell so that you'll be alerted when I upload a new video. Cheers!